Well, global equity markets declined over the past 24 hours, with most of the fears again coming out of Europe, and a lot of focus will be coming on the European Leaders Summit, which will be occurring over the next couple of days. But most of the focus, at least here at home in New Zealand, has been on the Reserve Bank of New Zealand's announcement for the official cash rate. Now, they made this announcement early on Thursday morning, and they've left the rate unchanged at 2.5%. This isn't really a surprise to anyone, but most people were really watching to see what comments they did make. And the Reserve Bank seemed to be fairly concerned about what's happening around Europe, and they do believe that this is going to have some impact on economic activity at home in New Zealand, as well as the ability for banks to raise funds. This may cost banks just a little bit more in the year ahead. Now, inflationary pressures really seem to be well in check at the moment, so this is meaning that there's going to be no need to increase the official cash rate anytime soon. So what does this mean for interest rates? Well, we don't believe that we're going to see a lift in the official cash rate until about this time next year. And this will mean that short-term interest rates will be able to stay low, and term interest rates will also stay low for the majority of next year. We may start to see things pick up through the year, but a lot of this will depend on whether we start to see things settle down in Europe, as well as when we really start to see the rebuilding effort in Christchurch start in earnest. Well, interest rate markets are also having an effect on currency markets around the world, and the fact that we have had slightly higher interest rates here at home in New Zealand has meant that the New Zealand dollar has also been stronger than other currencies around the world. So we have been picking that the New Zealand dollar would remain above 80 cents against the US dollar for right through 2012. But the fact that we've got so many issues going on in Europe, the US dollar is looking very strong at the moment, and the fact that we're also looking at an environment where our interest rates will be a little bit lower than what we were previously expecting does mean that the New Zealand dollar is likely to remain at these current levels. And currently we are trading at around 78 cents against the US dollar, a little bit lower early on Thursday morning. And over the next 12 months, we are picking that we're going to trade in a range of around 75 to 78 cents against the US dollar, with a little bit of volatility in between.